Welcome back to the channel. We have more big XRP news. We're going to start off with this here and get this one out of the way. This article is titled XRP Partners with OpenPaid. Don't worry, that second article you definitely want to see. I think that's very powerful what we're about to unveil. But let's read this little tidbit here. XRP and OpenPaid have announced the integration of Ripple payments with OpenPaid's real-time Euro and GBP payment rails. Enabling enterprises to mint and burn RLUSD and to move seamlessly between fiat and stablecoins, which once again, you need liquidity to do such a thing. You need interoperability to do that. You need bridge currencies. You need global reach, all of those things. That's the only way that stablecoins are going to function. And if you think not, wait until we get to that second article and watch what they're talking about here. All right, watch what they're saying in that article. But let's continue on here. Ripple is okay, and then they go into a little bit about XRP, etc. But it's positive. We're having more activity happening surrounding XRP. Things continue to move forward. Now let's move on to the second article here. So you have this. This is what I really wanted to get to. Payment hubs rescue banks. Look how they phrase that. Rescue banks. Let me ask you a question. If you were overboard a ship, you're in the ocean floating, you need to be rescued. What happens if you're not rescued? Tragedy strikes, correct? Same thing here. If they are not rescued, if they don't have something to fix the system, so to speak, even if it's temporary, they're finished. The banks are finished. You understand how much capital is attached to that? We're going to jump into that. Don't worry about it. Payment hubs rescue banks from $100 million digital payments chaos. I want you to remember this. Yes, that's a beautiful number, 100 million. I understand that. That's a low ball figure, and it's not showing you everything that this is attached to. All right, but let's jump into this article now. If you like this type of content, once again, use one of those strong fingers and boom, hit that like button. It begins here. The bar for payment experiences and consumer expectations has been raised by fintechs and digital first challengers. Didn't I tell you the pressure was on them? One, I said, I've been saying that. Number two, I've also said that Ripple, companies like Ripple, Hedera, Chainlink are targeting the weaknesses in this industry, in the legacy system, in order to put pressure on them for one of two things. One, they can run everything outright. That's why, as you saw in the video yesterday, if you did not see that video, you definitely want to go watch that video. Just look at the first article. That's all you got to do. Look at that first article. Go read it. That's one of the reasons why Ripple is going after a bank license. Are they the only one that's been reported in the last 3 days? Are they the only fintech that's been reported as going for a banking license? Did you see the other articles? You see what's going on right now? There is a takeover happening. Didn't I tell you that would happen? Listen, every DLT company that's worth its salt, who has a wise team, they're going to seize this opportunity right now. They're going to strike while the iron is hot. The legacy system is weak. They're vulnerable, right? And you can exploit those vulnerabilities. Now, they're either going to work with the DLT companies, and that's what I want to get to here, where they're going to be absorbed completely into the new financial system. This is just where it begins. But if they're not absorbed, let's say on that the possibility that they're not absorbed, they can't compete with the bank coin companies, and the bank coin companies will take over 100% outright. I don't know how fast that happens. You have to look into that information and decide for yourselves. But I know it's possible for sure. Once again, what does it say here? You're getting it from the horse's mouth. All right. And this is from companies who are polling and are analyzing the data of hundreds, if not thousands, of large financial entities. But look, it says payment experiences and consumer expectations has been raised by fintechs and digital first challengers. Now, let me pause again. Did you see the article that came out? I believe it was put out yesterday, where they were talking about digital wallets again. Did you see that? Big article. Powerful stuff. What was one of the cruxes of what they were discussing? How they could use digital wallets to bring back Their customers. There's been deposit flight for years now. A lot of people gone from the banking system, right? They're trying to, they want to keep that quiet now. That's a lot of capital on the side. So they were discussing how they could use digital wallets to bring customers back in, and how customers are demanding certain things that you only can get through a digital wallet, speed, etc., right? Instant access, things like that. Okay, keep that in mind. That's important. Who was one of the first to speak about digital wallets in the advantageous position it puts the bank coin companies in? Well, the BIS spoke on it, and who else? Ripple. They then purchased a digital asset custody company. There's a reason for that. But let's continue on here. So, has been raised by fintechs and digital first challengers, making frictionless transactions a staple of everyday life. The Payments Intelligence Report, which I hope everybody read, Moving Money Forward, the Power of Payment Hubs, unquote, found that digital transformation has put the pressure, exact verbiage I've been using. I told you they've been putting the pressure on them. Now they're using, it's always strange how that happens. They're using the exact same verbiage that I've been using, which means what? Once again, folks, we're on the right track. Yes or no? I mean, I'm saying this. I'm showing you on the spot the research that we're doing, the path that we're on. And then days later, weeks later, it doesn't matter. They come out and they confirm it. I'd say we're doing a good job. So they're putting pressure, it says here, I'm going to read it to you, has put pressure on traditional banks, many of which are struggling. They're exposing everything right from the horse's mouth. I want to emphasize that. Anyone can go read this article, download it, screenshot it, send it to your people so they know. If you want to, not advice, not financial advice for sure. Many of which are struggling behind the scenes, which means what? Well, we know from all the different articles and interviews, they usually put on a very good, strong facade. They're faking it. My apologies. I probably have to chop the video. I had a little bit of an interruption there. But let's get back to what we were talking about before. So now let me just continue reading from here. So the Payments Intelligence Report found that digital transformation has put the pressure on traditional banks, many of which are struggling behind the scenes. So they're exposing a lot with a complex web of disparate, siloed systems. Haven't I been telling you all that? It's coming back now to bite them. This is why they're reaching out to all the bank coin companies. This is why Brad Garlinghouse is smiling ear to ear. He's getting extra XRP tattoos. He's talking about how many banks they're working with, even though he can't drop names. This is why David Schwartz doing so many interviews. They're all excited. This is why. Because they know they're going to be able to feast. They're feasting right now. They're setting up the table for the feast. Siloed systems. How do you get around that? It says for various payment rails. So they came up with all these payment rails that are useless. What's the point of them? What's the point of them if they're all cut off from each other? See, you need a unifier, which is what the bank coin companies can be. It says for various payment rails like real-time networks, ACH, wire transfers, and debit, traditional banks frequently struggle to match the intuitive interfaces, real-time notifications, and transparent fee structures offered by digital native competitors. So they're inferior in every possible way. Just like I told you, they are inferior. If they want to survive, the BIS told them. The BIS told the whole world. If they want to survive, they must integrate with the new financial system. I'm paraphrasing, but the way the BIS said it was closer to, if you don't want to be left behind, you're going to have to utilize distributed ledger technology. You're going to have to upgrade. And they said that in multiple documents over the last few years that anybody could download, anyone can read. Which means trillions upon trillions of dollars stand to flood into bank coin companies like the not bank coin companies, but bank coin blockchains like the XRPL, Solana, Chainlink, Stellar, Algorand, etc. They just have to go out there and do their jobs. That's all. And you can witness it as you're reading articles and you're seeing who they're working with and who those companies' partners are and who they frequently collaborate with, because then there's a strong chance that those also will be brought into the network, because everything functions better as a network. If everyone's using the same technology, everything functions better. There's no compatibility issues, right? So now, traditional banks frequently struggle to match the intuitive interfaces, real-time notifications, and transparent fee structures offered by digital native competitors due to their legacy infrastructure. The result is inefficiencies. These are the pros telling you this. This is what they do. Beyond customers' dissatisfaction, these inefficiencies translate into financial drains for businesses, which lose an average of $98.5 million annually due to disruptions across money movement. Most of that will flow through DLT. That's number one. Then when you look at what DLT solves, you have the trillions in any other way that they're going to be using this, because these are transactions. So what type of transaction are we talking about? Are we talking about B2B cross-border? Trillions. Just outright transactions? Trillions. Payroll? Trillions. Where's there not trillions? If we're taking a piece, I'm not saying the whole thing, I'm being reasonable. If we're taking a piece of trillions, that XRP price doesn't stay below $10 or $15. That's dirt cheap. Dirt cheap. Solana doesn't stay where it is now, nor does Chainlink or any of these other bank coin companies that have a few banks. A few is where they began. Well, which most of them don't have a few now. They have, a lot of them have a good amount of them. Look into it. Look into it for yourself. Do the research. Let's continue on. Executive survey pointed to cyber threats. That's another thing, security. Immutability. Did everyone forget that? Immutability of the ledgers. That's another thing they mentioned when I was doing my research and all the different ways that they benefit. They don't have that. They're getting hacked left and right. You didn't see that? You don't see all the hacks that happened this year and last year? A lot of people don't know that. The banking system, the insurance systems and the medical system, they are so vulnerable. Information is getting snatched and then put on, and then they're holding it where they're like, well, you pay us this money, we'll give it back to you. How do you trust that? Right? And a lot of it ends up on what they call it, the dark web. Anyone can look this up. I'm not just making things up here. This is legit. They need immutability because some of that information literally got snatched and they don't have it any longer. So they need a way to be able to retain that information and upgrade their security, which obviously DLT brings to the table. And then once you combine DLT with AI, which Ripple has spoken about multiple times, you have some of the best security you're ever going to have at this particular time with the technology that is at hand. So then it says fraud in a complex regulatory labyrinth, which once again, with regulations across the globe, we have to think globally. We're dealing with a global system. These systems make sure that everyone's legalities are followed, regulations are followed. Smart contracts handle that. AI handles the rest. All right. It says, so then they jump into payment hubs. If you're looking at payment hubs, and you can have a different opinion than I do, I respect that. You should already know that by now. But if you're looking at payment hubs, please tell me that that's not a Band-Aid on a bullet wound. It is. From what it looks like, it's their way, because they have so much fragmentation. It's their way to have a centralized entity or thing where everything can flow through. But the way that it functions is still highly, highly inefficient. It doesn't do what they want, hence why they're trying to integrate with DLT. DLT brings everything together, and yet it strengthens every weakness that payment hubs has. Another reason why and then when you look into payment hubs, look at how rapidly that legacy system aspect that they're calling payment hubs is absorbing DLT technology. And that's eye-opening. The takeover is already beginning. There's no way around it, in my humble opinion, from what I'm seeing, okay? Oh, then they actually delve into it a little bit. I didn't think that they did. It says by acting as centralized command centers. I read this somewhere else. I like to do my own research and so I know what's what. It says by acting as centralized command centers, these modern hubs route payments across various channels. Right. So they have payment hubs. They've had them. But here we're talking about there's still all of this payments chaos. There's still 73% of not just regular businesses and banks combined together utilizing paper for payments. You see the flaw here? They can't escape what's coming when it comes to the new financial system. And I think we still have a few more hurdles to jump over, of course, but in the next year or two, and I know it's going to take some time, there's still a lot of partnerships to be made. 73% of businesses are still not involved just yet. So there's still a bit of a ways to go. But you and I both will be able to observe that as we're watching businesses get absorbed. The pro companies are going to put out the percentage of who's involved. So 73% are not in yet. That number goes down to 50%. You start thinking a different way about it. It goes down to 35%. We're starting to say, well, wait a minute now. Oh, everyone's almost all of them are involved. So we can begin to adjust our thinking as we're actively acquiring that information. Makes sense, right? So there's not a lot of guesswork involved there. It's just a matter of watching, of observation. But nonetheless, as that is increasing, the number of them involved, those prices go up. This is why I said also, once again, not to reiterate too much, but whatever prices we're seeing today, that's not where they're going to be in the future. It's just, and I think you'll get that confirmation from the professional companies, the ones that actually are honest. Same way that now, if you look at the past week, we're getting that confirmation on gold. On gold, same way. Gold is the leader. It's showing you what is to come, in my humble opinion. I could be wrong, not financial advice. But you're seeing them accept it now that they're saying $3,000 gold is the norm. That doesn't mean it's always going to be that. It'll be much higher. Maybe it'll hover around there, maybe go a little bit lower, but it's showing that they're accepting that reality now, whereas before they would have, a lot of companies and a lot of people said gold could never do what it has done. And I believe you're going to see that moment happen with crypto as well. It takes a little bit of time, but just like, once again, with gold, I think it's going to happen. And you'll hear them say, oh, a $20, you don't have to agree. You don't have to believe this. I'm just throwing a number out there. You'll hear them at some point in the future say, oh, a $20 XRP, that's just what it is. Everybody will normalize to it. Oh, it's the new norm. These higher prices. Not every crypto is going to do that. Have this exponential explosion. But the bank coins, I believe, bank coins will. You hear them being spoken about. You see the interest from the companies. They're sought after. All right, so I'm going to leave that one there. And once again, my apologies for the interruption earlier. I have to chop that little piece out. Let's squeeze in. I have no idea how long the video is now. Let's squeeze in a little bit of Bitcoin news. Bitcoin dices with $110,000 as U.S. jobs beat takes Fed rate cutoff table. Bitcoin reverses its push beyond $110,000 as markets discount the odds of the Federal Reserve lowering interest rates before September. Then it continues on. I think Bitcoin is in a great position. It's showing a lot of resiliency, and it's showing Bitcoin green right now at $109,839, looking real good in my humble opinion. I think it's going to shock a lot of people. I stand by that firmly. It says Bitcoin saw flash volatility into the Thursday Wall Street open as U.S. unemployment data dealt a blow to hopes of interest rate cuts. Data from Cointelegraph Markets Pro and TradingView show BTC USD retracing much of the day's gains, which had seen the pair reach nearly $110,300. U.S. non-farm payrolls data showed that more jobs were added in June than expected, while unemployment exceeded estimates. Quote, the May jobs number was revised up from 139,000 to 144,000. The headline numbers continue to crush expectations, unquote. Trading resource, the Kobisi letter wrote in part of a response on X. Kobisi described the jobs numbers as, quote unquote, very hot, warning that the Federal Reserve now had another reason to delay rate cuts, a blow to the crypto and risk assets. All right. Okay. Listen, not a lot of things don't shake me up. It's very difficult to shake me up. Everything looks good to me right now, and I'm not going to take someone else's word and allow that to creep into my mind in that way, where it shakes me up. I'm like, oh, it's a blow. No. I know what I know. I know what I see. I believe myself. I trust in myself. And what I see, crypto looks good. Crypto looks strong. We've been through extreme volatilities. So what this little bit means nothing. We've been through countless massive storms, if I could put it into that visualization. Our ship has been rocked back and forth, tossed through the air, blasted with lightning bolts. So a little breeze. I'm not quaking in my boots at a little breeze. We've been through tornadoes. And as you can see, with a lot of the articles that came out before, and Bitcoin, something may happen, a negative catalyst popped up in the last month or two. As soon as that happened, I saw articles, oh, the world is on fire, Bitcoin's going down, and it didn't. And I said that, I don't believe that, and it didn't happen. I'm not saying it can't happen. I'm not saying it's not going to happen in the future. I'm just saying I trust myself, as you should trust yourself, over anybody that's externalized. We don't know their motivations. That's how I feel. I'm not going to tell you something that I myself don't apply. So is it a blow? I suppose technically you could say that. I don't feel that way. I don't feel that way. Crypto looks strong. The bank coins look strong. The Bitcoin looks strong. And that's where I stand. It continues on here. Business consulting firm BlackRock's co-founders of crypto trading resource material indicators went further, stating that the unemployment drop, quote, takes a Fed rate cut in July off the table, unquote. All right, so be it. So be it. At some point, because of the utility of the bank coins, because of the desire by large companies when it comes to Bitcoin and a few other legacy crypto assets, it takes their prices right out of their hands. It takes it right out of their hands. Same thing with gold. It's just, central banks prop that price up. Have you seen anything that they're doing now? Any of this stuff going on here really affect gold? No, the central banks want it. Big businesses want it. Big money want gold. Thus, the gold price stays high. It's the same thing. This is not complicated, although they will try to overcomplicate it to confuse the people. But that I'm here to bring clarity, if I can bring anything. It says, quote, Fed funds futures now just price in 2 cuts in total until December 2025, unquote. Andre Dragos, European head of research at crypto asset manager Bitwise, noted. Okay, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.